Okay, so we had some carnage today, a little bit yesterday too. Bitcoin not feeling it as much as the alts, but still in a pretty spooky spot right now. Last couple hours, we just took out the bottom side liquidity, at least the more local stuff, and we're seeing a small reversal so far. Looks like a lot of shorts taking profit because we're not seeing too much buying coming in on the spot book. In the last hour or two, a decent amount of buying has come in, but not nearly as much as the amount of selling that we saw. So it looks like shorts taking profit. We just took a lot of the liquidity out on the bottom side on Bitcoin, which is a good sign. So in the last month, pretty much people that longed it, a good portion of them have just been invalidated, and then the short side is still open. So I'm going to keep it a bean with y'all. This does not look good, not just because we're dumping, but ever since the structure broke up here, I talked about it last week, I've been a little bit concerned. I let you guys know that the probabilities of dumping further have shifted, or it's become a higher probability that we could go deep sea diving here. Of course, there were areas where we could rebuild the structure, and I was kind of hoping that was going to be the case, but when structure breaks, kind of just optimism that's left at that point. So we still have stack liquidity on the top side, bottom side has been taken out. If you don't have a hedge on Bitcoin, there's a couple areas you could look for. The most passive area would be see what happens here, which I talked about last week. Now you've got some other areas to look for, but we got stack liquidity all the way down. So flushing out this liquidity here, we don't really want to see good fluidity. So basically, if Bitcoin dumps exactly from 114K, that's pretty spooky. It shows that the bears are in control, and we could definitely go deep sea diving like what I was saying earlier. Optimistic scenario is the knife gets caught at 100K. It doesn't really sound optimistic, right? Bitcoin dumping to 100K, but if it does dump, the knife being caught at 100K would be pretty nice. Although I'm not super confident on it because based off the relative volatility, you just got a bunch of people who dogpiled into Bitcoin in this range after the dump. And if we go below basically those lows, could see a lot of panic on the streets, a lot of blood. So you can see that 100K is not very far from these lows based off how much movement we've seen in the past, which is a bit scary because, all this consolidating we've been doing since all of October and now heading into November leads to usually a big movement on volatility. So pretty much all of October after the dump came in, we've just been consolidating in this range right here. We haven't really gotten a good sign of what the supply and demand is on the high time frame, so it's a bit tricky to call what the supply and demand is. But looking at the sort of local structures and stuff, obviously they did break down. That's a warning sign. It doesn't necessarily tell us what the supply and demand is, but it is a warning sign. Unfortunately, as a result, the price is back at the range low that we built in October. So if the October range breaks, again, the optimistic scenario is that Bitcoin holds 100K. And then, I talked about this level pretty much at the beginning of the summer. It's been a while since we've even gotten, the possibility of us getting a refill here at 89, 90K, but guys, this is really important. If you're more of a slow mover on Bitcoin, more passive buy and hold type of guy, and you're wondering, could we see a lot of blood in the future? Could it go a lot deeper? You gotta hold 90K, man. You gotta hold 90K. If you don't, it could get pretty bad. As far as how bad could it get, maybe returning to the 60K levels, maybe even lower, depending on what the structures build there. So things are looking pretty bleak. The question is, if we do go for a rally now after liquidating the leverage market, so longs got flushed out, shorts are taking profit, which when shorts take profit, it's going to equal a market buy, and that's what a lot of this rally that we've seen in the last couple hours has been driven by. Now we need to see if the spot market actually shows up, because we saw a small imbalance of supply and demand, pretty much the October imbalance of supply and demand down here, or the later October, and then the full October would be crushing these lows here. So if we do get a rally, I am going to be a bit skeptical about how strong that rally is until the price action shows it to me, given that we still have some stack liquidity on the bottom side of the market, right? A lot of people who longed in October, at least the later part of October, have been flushed out as of today. The people from earlier in October, sort of the first couple weeks of October, still could be positioned at these lows and these lows, right? So these guys just got taken out here when price went below it, and we still have these guys down here from earlier last month. So obviously looking at the other side of the market, we still have these guys who haven't been taken out, and these guys who haven't been taken out. As we go higher, going to be a little bit more skeptical because we're leaving behind some stack liquidity here. I do want to see the spot market sort of support the move. I don't want to just see a rally that's based off of shorts taking profit. That doesn't really lead me to be confident. So there's two scenarios where one, we're going to see the true supply and demand, and the other one we'll start to see the fluidity. So, you know, how strong in this range are both the accumulation side of things and the distribution side of things. Most of the stuff on the bottom side is done, which is good and bad. The top side, not much has been done except for, you know, well, this has been done, but in terms of what's inside the range. So most of the top side on the high time frame has been done, but all the new stuff that we've been building these last couple weeks hasn't really been tested yet. So there's a couple areas to look for. If you're looking for more aggressive stuff, you could see, okay, what happens above 111.4, because that's where you'll see like a sort of micro imbalance of supply and demand or not, which would give an opportunity. So we really don't want to see a failure here either, but it's not as big of a deal as, say, seeing a failure here, because that just shows again that the bears are in control. Basically, when the bulls rotate to the bear side of the territory, you know, and they start pushing through those enemy lines, how do the bears show up? Do they have control? And then these little micro movements, we can see sort of the imbalances of supply and demand on a smaller scale. And then the bigger scale of what really is going to determine where we're going, probably up until next year, potentially up until next year. I mean, the market can move a lot, but is what happens here, and what happens when we crack these lows. So we built the range in October. Now we haven't really challenged anything outside of the range, so we haven't really seen sort of the high time frame supply and demand. We have seen structure break down here, and we've seen little, you know, attempts at recovery, but ultimately they've just been getting flushed. So that's concerning. I am still mostly bullish on Bitcoin long term, but it's starting to become a little bit, the price and the structures are starting to shift probabilities a little bit more than I'd like to see. So basically it's time to pay attention to this long-term trend. We could see, you know, I'm not saying we can't get a nice little rally going, maybe tag all the way up to, you know, 118,000 or something like that. But that's where it's really going to be important to pay attention. I mean, and when I talk about long-term trend, I'm talking about, you know, pretty much the rally that we've had since 2023 all the way up. Bitcoin's not going to zero, right? But could we see some deeper sea diving? We certainly could, given all things that I'm seeing here. So I think we'll probably hold 90K, but it's impossible to know. And whether or not we're actually going to go to 90K is going to be dependent on you know, what happens under these lows or what happens under these above these highs. To put it simply, we haven't broken out of this range, but the action that we saw in this range has been rather bearish, which is concerning. And then when we do, if we do, we'll eventually break out of the range, whether it's the top side or the bottom side. We'll be able to see that supply and demand. The best case scenario for the bulls is to break out of the top side, squeeze the shorts, don't fail this, and then just continue the run. Another scenario for the bulls that isn't as bad is being able to hold it here after everything gets flushed out and then, you know, recovery. And then still a good scenario for the bulls, but going to be a lot more bloody, is actually holding this. And if we can hold this in a big way, then we should be good for a really strong rally, because that confirms the structure of 2025. Confirms that the high time frame structure is still fluid towards the bulls, but these sort of lower time frame structures that we built quarter 2, quarter 3, and now heading into quarter 4 has been, you know, kind of crushed, so to speak. So we'll keep an eye on this. You know, obviously areas to pay attention to is what I've listed. It'll be in the recording so you can check it out. There's some more aggressive stuff to look for, you know, for the traders in the chat that I'll go through in a little bit here. But yeah, if you missed it, the high time frame analysis, you'll be able to see that at some point later on. So yeah, longs got flushed. You can see here there was a lot of liquidations, stop losses sort of dogpiled underneath 106K, and those just got tagged out. We're seeing that reversal, so not fully convinced. It's just spot buying it up, sort of leaning towards right now, looking at the orders, and looks like we might see a reversal, but I don't know how driven it is by true demand and versus just market makers knocking it around to take all the liquidity on both sides of the market. We're seeing a decent amount of good buying coming in this last couple hours, but again, it's not really anywhere close to the amount of selling that we've seen from Sunday and then up until now. So I'll leave Bitcoin up on the low time frame. You know, obviously there's some big areas that are staring at us, right? Which is, you know, retesting this kind of stuff, but I don't know. We'll see if Bitcoin gives it to us. We already had the local test, and now it's just, you know, maybe something like this, right? Sweeping out these guys on the local test, getting the high time frame test, and then continuation. But again, this play is mainly a play on the derivative market, looking for the squeezing out the shorts next. I'm not seeing too much on the on this actual demand side of the market, but that can change, right? If I see that change, I'll let you guys know. All right, so stock market is doing pretty good. Nothing too concerning except for the volatility index is still kicking up from the area I was talking about. Best case scenario is that the volatility index starts going down, right? That would really help all the markets, including Bitcoin and the cryptos. But I certainly could still see a test of 22 up to 23. And then hopefully if we do reject off 22, 23, then we're smooth sailing probably the rest of the year. Okay, so if we do see another wave of volatility hit the market, I'm hoping that we reject here on the volatility index. If we do, then the S&P should be good to continue to run higher. The thing is, of every pump, even the smallest ones are being sold into this so bear market. Yeah, it depends, right? So if we get a pump, like here, let me map it out for you. If we get a rally right from here, then the next, so like we take out all these highs and stuff, then we start looking at these. So let's say something like this happens. Okay, we get a rally, pretty significant, right? A couple daily closes above, maybe run into some trouble there or something. When we do get the pullback from this rally, I want us to be able to hold it here. If we hold it like down here again, like something like this, like yeah, it's nice because it's pumping, but it's not good fluidity because it shows that basically the first battle is happening right now. So far, if the bulls win the battle right here and now, they've done a great job at winning the battle. That means there's a good probability that they'll win the second battle. The second battle takes place where there was other liquidity. So when you look at this chart, like where do you think there was conviction and liquidity? Where do you think a bunch of people sold at the same time? And then if a bunch of people sold at the same time, why didn't we go lower? Okay, so we still could go lower, right? We're not out of the woods. The daily hasn't even closed yet. But in the event that we don't and we get a rally, that's a great sign. Particularly after having a test of it, which pretty much happened here. A little bit lower could happen as well, but... and then we look for the next area where a bunch of people sold, right? A bunch of people had invalidation, stop loss liquidations, right? And the next one above that, so like maybe something like this, right? And you just want to hold these. And it goes all the way up, right? You have that, and then you have that. Yeah, just areas where there was conviction and liquidity. Where there wasn't a lot of disagreement with the order flows that were coming in. A point in time where everyone presses the same color button at the same time. Instead of pressing red and green, like there's some people, like right now, there's some people pressing red, there's some people pressing green. But a moment in time where a bunch of people get liquidated, a bunch of people get stopped out on longs means that it's just going to be a sea of red coming in. And then the price doesn't take a nosedive after that. That usually shows some sort of a little something on the opportunity side, potentially. And then we use those areas in the future. Because old school technical analysis would say like these levels aren't useful because price has already gone through them, right? That's not how I approach it. And then also, like, even if you're people come in here all the time, like inner circle trader guys who like use fair value gaps. They don't look, once a level gets taken out, they don't look at these levels, right? Like inner circle traders are not gonna look at that, for instance. They're gonna look at like this because it hasn't been taken out fully, and they'll be like, "Oh, see, told you, fair value gaps work." I don't know. I don't really follow that kind of stuff. It is possible to be profitable using fair value gaps, but since the strategy is not that good, you need like excellent execution and risk management, which is usually where most crypto traders are the weakest. Most crypto traders are the weakest on their execution and risk management. So yeah, you would need like stellar execution and risk management to be able to be profitable with like fair value gaps. The reason why it's not the worst strategy in the world, though, is because at least it's founded in looking for decent risk reward. It's not a strategy I use or I would recommend anybody to use, but I know a ton of people do use it. So yeah, I mean, it's like waiting for price to come to you, using decent risk reward. That's all pretty good. You can iron out a profit doing that kind of stuff most of the time. There's also another world. I see another scenario too happening here, since there's some breathing room on Bitcoin. And when I say breathing room, I'm just talking about like the distance between this and this. We could form like, since we have like this is where the breathing room is, right? We could also form like a 4-hour bull div, which probably wouldn't take place until tomorrow. Maybe for the Europeans, it'd be like morning time. For the Americans, it'd be like, you know, probably like midnight or early morning. But like something like this maybe, where we sweep out all these people and then go for it. And then if we get a bull div in the void, then it's better shot that we're going to take out the high that created it. So that's another scenario that could happen as well. It's a lot easier for them to make a new low right now as well, because there's already a lot of panic. So you already have a lot of the fear guys on your side to push it lower and use the people that longed it today as liquidity. There is a bull div right now, but there's a lot of data in between it. Like this bull div here, you're talking about this one, right? It doesn't look that good to me. There's just too much data in between it. I like to see really tight bull divs. You know? Like if you've looked at divergences long enough, particularly the higher time frame ones, because those are pretty much the only ones worth looking at these days. Back in the day it wasn't like that, but these days it's pretty much only worth it to look at like 4 hours. If you've looked at them enough, you can kind of see which ones are good and which ones are bad, like which ones are more likely to work out. And more often than not, the ones that look good to you will likely be the ones with really tight data. Like this one, for instance, right? This one right here. So like, you have a lower low, barely have a lower low. It's kind of hard to see it, but you have a lower low, higher low on the RSI. And there's only like 2 candlesticks in between both these on the 4 hours. So there's only like 8 hours in between the divergence. Whereas this one, the one that you're talking about here, I mean, God knows, has like a full day in between it, maybe even more. It's like this is still technically a bull div, it just doesn't look as good. Whereas like, if the scenario I'm talking about right now, where like this, you know, like maybe the next 3 hours, well, the next 7 hours, we don't go below this, but like, let's say we get one more candle here and then we go below it. That looks a lot better, right? So like something like this. If we're gonna go for the lows. What also could happen if we go for the lows is just fucking doom. But if doom doesn't happen, then it's a bit interesting, right?